Should be live here. Welcome back, guys, to another session. What I want to break down today is an interesting concept that I hope is going to give you some clarity and probably some hope how bright the future really is if you're doing things correctly. So, what I want to break down first is 99% of all traders will blow their accounts and will lose. And how could that happen when you see that the stock market always go up over time? If we take a period of just 5 years, it always goes up, right? Even 3 4 months, if we have a crash, it's always recovering back to highs or even breaking new highs, right? So as a trader, we have to understand this is extremely hard business. This is the business where you can make the most amount of money ever. There's no other businesses you can compare it to trading. You could make unlimited, but you could also lose everything if you do not control it. So what I want you to have now to go with is you have to take trading extremely seriously from today. It is the hottest, most sexy, most interesting business to be in. But you have to take it very seriously like a professional business, okay? So, what I want to go over is never risk more than 1% of your account on any trades. See if you could time more long position, so more buying market than selling market, because you always going against the market by clicking selling, because the market is like a compounding machine, it's like a weighting machine. It will always go up. Of course there's some volatilities, and it can be a voting machine on the short period of time that it goes back and forth, but every time it's 80% of the time it's going to go up. So there's probability against you all the time that you're going in for shorts. That you're always going to lose money if you short the market, always. Especially if you are trading with a live account, you're holding overnight. So never hold a short position overnight. If you're over leveraging, never risk more than 1%. Never hold a position overnight, and not always just trading these shorts like we do all the time, because the market it's going up. Okay, so I mean you just have to understand that once you start trading with live accounts, and once you start passing these accounts, making sure that you're probably doing 70% longs and 30% shorts. It's not coming. So I know we are selling off very heavily. Once we start selling off and we recover slowly, but all the time you're not going to lose money. I don't even think we have even been losing a position on my live account historically if I went long. If I do the right position size, right, and I have the right stop loss, and the setup is just not, it's okay, it's going up, it's going my favor, but it's not really making any progress. If I have just been holding it historically, I would have made a fortune, right? I wouldn't even have to work anymore. I don't even have to do that anymore. But if I was just buying either index funds or just trading longs all the time by to keep buying, I wouldn't have lost money. I don't think so. So it's interesting to have that kind of perspective. I'm not saying you should flip the switch now and then maybe we see a market crash in the next couple of days because we want it to, right? But that's not always what the market is doing. So always ask yourself. I just want to go over something quick before we begin. So I'm very close to start trading. I just have something I want to go over, okay? Before we getting started here. Um, so here, um, so default BS long. So assume the market goes up unless proven otherwise. If you don't see a clear short setup, you do and not do anything. Okay, so you do nothing instead of forcing a short. It's very important. Um, Only short if these conditions are met. Price below yesterday's lows, market showing weakness. So if it's very weak, we can consider it if it continues to sell off. But if it's going back to our stop loss, we're not trading more for that day. That's the right mindset. So if we go in, it doesn't work, it's taking time, it goes up, done for the day. Don't force it. It's always, it's 90% harder to make money while shorting than going long. So you always have things against you, you always have the math against you, you always have the system, you always have everything against you while you're going short. It is extremely hard to make money shorting, okay? It is much higher than going long. And also, these conditions have to be met if you're taking a short. The 50-minute opening range breakout falls to equally claim. Okay, so if you do not really see, like, if it's not really pushing above or it's not selling below and we have an opening range breakout, we consider doing it. Okay. Um, yeah. So we have to make sure we're trading with the trend, not against the trend. We have to make sure that below the rewrap and both 15 minutes and 1 hour trend are down. So if we look at the 50-minute trend in here, it's pointing up. So let's don't take a short. On the 1 minute hour, it's also pointing up. So let's don't take a short. There's no reason doing a short when things is pointing up. Max one short attempt per session is stop, no revenge shorting. So you could do basically as many longs as you want, nothing wrong with that. But you do not do more than one short per day. So this is kind of like a new rule. It's not that I'm putting some data in your head. No, I was just telling you and trying to help you that don't ever on your live account, these funder accounts, the evaluation, or once we have passed it, the challenges accounts, or once you're trading with your own account, or I also try to do that on my mirror trading, once people mirroring my trades automatically, I'll try to not do more than one short per day. So for me, it's not about being perfect. For me, it's not about winning all the time. For me, it's about make progress in my life and be 1% better every day and compound small. So stacking up small wins, but also small progress on my own learning curve and my own life. Okay, so I just have that rule right now that if I do one short attempt, if it did one short I did, and I identified and meets my criteria, and this doesn't work one short, I don't take another short. Okay, so that's just it. Um, and we should try to hold more longs. We should try to have, when you have live trading account with your own capital someday, we have it now. Do one account with MetaTrader. If you want, I could probably publish this on YouTube. I think I'm going to do that, but I'll leave the link below where you can join the broker that I'm using for real money trading. It's both TD if you're more active and you really like, but you could also use MetaTrader 5. But then you should have, in my opinion, on MetaTrader 5, I think you could use it on Vantage. Yeah, I'll leave a link. But you could have two accounts, open two accounts, it's free, and then have one account where you only do long positions, and then have one account where you're doing long and shorts, but never more than one short position. Then you're forcing yourself to that account A or that account number is only long position. So that was basically it. I just want to go over that very quick with you. So also here, go long on confirmed range. So price holds above yesterday's highs or reclaims rewrap after a dip. Opening range breakout 15 minutes. We always go longs if it closes above the highs. Okay, so we could bind the dip support previous days rewraps or lows or key daily level. So if we find a key daily level where we want to buy in, it could be on the DAX here if it's selling off back to here, but it's not breaking below within the first 15 minutes. It's not breaking below and it's holding some support. We can go long, right? So if it's holding a key level support, like try to think in more long term and think about more like, yeah, yes, you could buy an S&P 500, but you want to be focused on trading. So what you could do instead to outperform it is just buying it, smart, right? And then sell it a little bit more, like not shorting it, but you buy it, it goes up, you cash out, and then you wait for it to come back, and you're not shorting it, but then you come back and you buy it again. So think like you trading on not a trading platform, but you're trading with a bank where you cannot go short. It actually works a lot. And always set a TP that's 2-3 times bigger than your stop loss. Example, 20-point stop loss, go after 60 points. It's just some quick clips because I know this is going to help you over the next 3, 4, 5 years of not thinking so negative about the market, because I promise you, we will see crashes, but I promise you over time, this is just going to go up. Okay, of course we could have some sort of like correction where things is like really selling off, but overall, it's just going to keep goes up. And it's gonna keep goes up, and you think it's very overbought, and it is. And I know we shouldn't be buying it. You don't have to buy the stock. You don't have to buy this. I'm just saying, once you're thinking that this is gonna crash, it's more about your feeling. It's not really logically, and you should just consider doing more longs than. So, I mean, make sure you have separate accounts. Make sure you maybe also have an investment account where you're buying long. So this could help you if you have some income, if you have some salaries, if you have some income from trading, or you made some money, put it into an index fund, S&P 500, because that will make sure that your brain works optimizely. So if you put in your money, all your money into an index funds, it's just going to go up 10% on average, right? Of course, there's going to be some swings, but if you look over 15 periods of time, it's going to compound, and you're going to get extremely wealthy by buying an index fund over 15, 20 years, just by VOO, index fund, Vanguard, S&P 500. That will force you to not think so negative about that stock market all the time, that this is going to crash, because on the other side, you basically have a long position for the next 15, 20 years that you basically in the index fund you're allocating to every single month. The ones I'm talking about, just to give you some value, but this is really about growing your wealth. But I am personally, I'm not an advisor, I'm not saying you should do it, but I'm personally buying this every single month. That's forcing me to not think so negatively about the market. I was just beginning doing this, so this is also new for me. I know about index funds, been doing it for a while, but I start allocating more of my resources, more of my income from trading to S&P 500. Normally, what I was doing, if I was very sure about a stock market crash, I went in and I bought this one. This is 3 times leverage short on the Nasdaq. So if you buy this one, Nasdaq crash 10%, you have 30. I'm not doing that more. It works only one time, like every 5 years. So you have the odds against you, and every time, like I mean, the best you basically could do, if you ask me, is if you just allocating some of your income from your salary or from your trading, like 50, 60% to the index funds, then you're not going to think so negative about the market. I hope it was not too much talk. I hope it makes sense. I'm going to trade now with you. Have separate accounts, do more long position. It's going to really help you be more successful and think differently. Okay, so if market makes new all-time highs that we see now, don't short blindly. Wait for a reversal confirmation. We don't have any reversal confirmation at all. Okay, things is just keep pushing, and just, I'm sorry guys, just fucking accept it. It's just gonna go up, and that's how it works. They're printing money. They're gonna push it. They're gonna push it much more than you think always, and that's just how it is. We just have to accept it. Okay, so accept it that things is gonna go up, and before each session, ask yourself. This is what I was asking myself: if I was trading biased, would I buy or sell here? If I wasn't trading bias, I'm trading the chart, or my opinion about the economy. If I don't see a setup, can I stay flat and wait? So is this about the economy that I say short? Correct, then I shouldn't be trading it. Is this about the chart that I say this is a short? If it is, then I could consider doing it. I'm just trying to help you. I'm not trying to get you into something, okay? I'm just trying to tell you what I'm doing, taking my money, put it into S&P 500. It might crash 30%, and I don't care, because I'm not buying. I don't take all my millions of dollars and put it into S&P 500. No, I do it from my salary, from my other income, trading income, and I take every month or every week a decent amount, like a little percentage, like let's say 2 or 5% of my income. It could also be 10, 20, 30%, and I put it into S&P 500. The strategy is dollar cost buying. It's not dollar cost. It's not buying everything at once. That's why people, they put all their net worth now they want to get rich. They crash 20%. They selling out lows. It goes all the way back, and they buying because they fear of missing out. So never buy for all your money at once. Have a system. Have a structure predefined of you buying for a certain amount of your net worth, or it could also be your salary every single month, and then you're gonna do very fine. You're gonna do better than 90% of everyone you know. So the system is pretty simple. Let's see here. Yeah. So I hope it makes some sense. Maybe it's not, but don't take everything and put it in. The same way if you're buying stocks, do dollar cost buying. And if you want to sell your companies like the stocks, or you want to do something, you do dollar cost selling. Same with index funds. You don't sell everything at once. Same with Bitcoin. Same with Ethereum. Like Bitcoin is doing amazing. If you want to buy Bitcoin, I mean, then you do dollar cost buying. You don't buy everything at once. You buy like maybe once a week for a little amount that you don't care about, and then you just set and forget. So instead of spending your money on alcohol, instead of spending your money on like clubs and showing off and cars you can't afford or clothes that you don't need, take all the money you would spend on coffee and just use the broker um, that you prefer where you're from, and you're just setting off that you want to invest X amount of this. If you're from Denmark or Scandinavian, you could be using Nordnet or Saxo Bank and have an Access konto, or you could also have like a normal account. You just investing every single week or every single month into this S&P 500. It could be VOO. I don't think you can buy that, but you could buy S&P 500, right? So you could buy any iShares. They have something called where you're investing. It's called monthly savings, right? But again, that's not my focus now. I just want to try to see if I could guide you a little bit in the right direction on how you should think and how your mindset should work. And yes, you might see lose them a lot, and then you might see I'm very negative about the market. But the difference is I can afford it. So I can afford losing 500k. I can afford being wrong. That's the difference. Okay. Let's see here. So it looks like, right, it's just gonna hold. I mean, it could push below. Nasdaq is breaking up. Let's see here. Nasdaq is just holding. I mean, DAX is very overbought. You just have to be aware of that. I think DAX is gonna sell below at some point. It's interesting to see, but I think DAX is gonna kind of like hold for now. So I could consider. Do we have a bank holiday? What? Seriously? Don't say that. Oh my God. We actually have a bank U.S. government. We actually have a bank holiday in Germany. So the stock market is actually gonna be closed today, I think. Let me just check here. No, it's not closed. It's actually opened. I mean, should I still trade it? I mean, I should probably not. It's a bank holiday. Okay, so we have meetings here coming in at 11. We don't have anything else. We have non-farmer payrolls, right? Unemployment claims. We're gonna have big tendency. What does that mean? Okay, so these news here. Okay, tendency events as to delay. Okay, so interesting. The news that we should have today is not maybe coming out, as I understand it, because the government data may be impacted by the shutdown. Maybe, okay, we don't know. It's uncertainty. Okay, it's not super clear. I mean, I was at least breaking down a little good concept about how we could view the market. I think the smartest move for me personally is probably not to trade. I could trade the Nasdaq with you, 100%. I'll do that, but I might not trade now. I should not. Yeah, I'll upload this to YouTube. If you want to do mirror trading with me for free, where everything is just automatically, you need a live account, but then I'll leave the link below. But also, regarding these platforms, I'm not affiliated with anyone of these, so you could just sign up to whatever broker you want to do this, like investing, index funds, S&P 500. It doesn't really matter. You just have to be an S&P 500 at a low cost index fund. It could be like basically anyone, iShares, S&P. Yeah, it could just be could probably be. I could actually let you know. I could leave below the best index funds if you're buying in dollar, and if you're also buying. But again, you could just go to ChatGPT and then you could basically ask the question. I will leave the link below with the two best index funds. So I mean, there's no trading here. It's bank holiday. I just don't want to trade it. It's too risky. Okay, so I'll see you later.